How's it going, everyone? Welcome to another video in the course. Now in this video specifically, I'm going to be covering a 15-minute time frame approach towards the market. I have a very specific POI selection. Now I do use this POI selection myself. I posted in the group a while back. It was on the website. I've remade it, just to sort of look a bit neater with the colors and the color scheme and the logo. So yeah, I'm going to explain how this POI selection works, and first of all I'll run through the POI selection and then I'll show you some charts with some zones selected. So let's look at the POI selection. Now the first thing I have is clear POI with imbalance on the hourly and the 15-minute time frame. So if you're looking at POIs on the 15-minute, then you can apply it to your 15 minutes. So do you have a POI on the 15 minutes with clear imbalance? If you do, then you go next step, right? Does the POI have break of structure? Cool. If it has break of structure, then you go next step. If it doesn't, then you wait for a break of structure. Then the next one is, do we react to a demand or supply zone? If the answer is yes, then you go next. Do you have a liquidity grab? If the answer is yes, then you go next again. Does it have inducement? Yes, go to the next step. If no, now for inducement, you don't necessarily always need it for every single trade or every single POI, because most of the time you might not get it for the zone, but you might get it for your entry point. So inducement is I wouldn't say optional, but if you have it, it sort of raises your POI to a higher probability one, right? But not having inducement doesn't make it low probability. So just to be clear, the last one is the POI in premium versus discounted range? If it's yes, then the trade or the POI is valid. So let's just look at a GBP USD in current price action, right? In current price action, how does it look and everything like that. So looking at this point you can see how it's a bit messy, but on the 15 minutes it gets clearer. So on the 15 minutes we have quite a few zones here. You have, let's look at the first one, right? Does clear POI with imbalance on the hourly or the 15-minute time frame. So what do we have here? We have a POI here. We have break of structure, so let's mark it out. Let's mark it up first. We have a break of structure, yes. Do we react to a demand or supply zone? Let's have a look. We did have a reaction here. So you can see how this point, right, this would be sort of a demand zone. So we did have a reaction here. You can see how price sort of pushes up and pushes down. So we did have a reaction. So this, we did the POI grab liquidity? Now let's have a look. Did it grab liquidity? Now for the 15-minute POI, one thing is you got to drop time frames to get a closer look, right? So what does it mean to grab liquidity? This would be a liquidity grab, right? This would mean a liquidity grab, and having this region here would also mean a liquidity grab, right? When you have a few candles ranging or you have wicks, that would mean a liquidity grab. So here we do have a liquidity grab. This is something that will take a while to get used to, but you'll probably see it a lot clearer once you start marking up the charts. Now, does the POI have clear inducement? In this case, we don't, right? We don't have clear inducement because it comes up and it shoots down. Is the POI in premium versus discounted? You can clearly see if you take the whole leg, right? Let's look at this point. If you take this whole range, right, from the start all the way to the finish, or even if you take this whole leg here, we are indeed in this range, right? We are indeed in a premium range where we can sell. So that is the first zone, right? Let's mark break of structure again so you can clearly visualize it. So let's look at another one, right? Here we have another break of structure. So cool. First of all, what we have is we have a decisional zone here. You can mark it up. Does it grab any liquidity? Let's drop time frame. Let's have a look. Let's replay it here so we don't go back. You can say, yeah, we indeed did, right? So let's mark it up here. So that's our time 15-minute POI first, right? Then let's look at the next few ones. Did we react to a demand or supply zone? This isn't really a demand zone, is it? Let's have a look. Did we break any structure? Oops, trading views going really slow. Okay. Did we break anything? Not really. We didn't really break anything here, so nope, this wouldn't be a valid point for me, so we'll remove that. Now let's look at this point. This is an extreme point, right? On the 15 minutes, this is what I first saw. I went, cool. This looks like a nice candle here. We did break structure, and this is the extreme move all the way down. So when you look at a candle like this, just try and move around time frames. What do you see clearly? Then you see this candle, a 30-minute time frame. So you go, cool. Let's look at this point. All right, let's draw it out here, and then we go, okay, we have that zone. Now, do we have any liquidity grab? Okay. So we have this, right? We do have, it would be kind of pushing it to say we do have a liquidity grab, but what convinces me in this is because we're following order flow. So in this case, did we grab liquidity? Now, the simple answer is we did not, very distinctly, not as clear as this one, right? Because the POI just goes up and then it goes down, right? So if we look at price action here, you can see how it sort of grabs liquidity here because it breaks the high. So there might be a lot of sellers here because you can see how price pushed down, and then it grabs it and it pushes down immediately after that. So in a sense here we can say we did grab liquidity, but it's not very, very clear. So let's look at the 15 minutes, 30 minutes again. Now, does the POI have clear inducement? You can see really clear as day we do have inducement here. And then we have a mitigation and a push. Is the POI in premium versus discounted range? We go, cool, it is in premium range, so this would be a valid POI. Right, so we had one here, we had another one here. Now let's find a few more, right? A few more POIs here. Now these are a few POIs I've marked up. So let's run through the rules again. Cool, so this one. This is a demand zone. Let's look at it again. Boss top. This was before the huge move down. So we have a break of structure. It is a clear POI over here. Draw it out, and then do we react to a demand or supply zone? We actually don't really react to anything. There's no imbalance here, so we're not really reacting to anything. Drop to the 15. No, not really reacting to anything. So we don't really have a reaction here, so I wouldn't really be marking this. Right, so let's look at another one now. Is this a demand? Nope. This demand reacted, followed through, broke it. So we actually don't have a reaction, but we do have a demand that we broke. So we can draw this out. This is a demand. Look on the lower time frames. What do we see? Oh, trading view is really slow today. Okay. There we go. This is what I was looking at. Now, what does a reaction look like? A reaction is simple. When you have a zone like this, you want to see price you want to see a candle tap in and it sort of wicks back up. So you see how it wicks back up? It wicks back up, it wicks up, wicks up, wicks up. So what that wick means is there is some buying going up, but it's overpowered by sell. Buying going up, overpowered by sell. Buying going up, overpowered by sell. So that is what a reaction entails. That's what it means. So in this case, you do have a reaction here, right? This was a valid demand zone. If you look on the 15 minutes, oops, sorry about that. So if you look at this region, right? We do have a valid demand zone here. We have a break of structure. And what we have next is we have an invalidation. So we did break it. So what we have is we have a boss, right? So if I draw the boss out, we have a boss. We did react to this supply and demand zone, right? Because we did push up a bit on this wick. You don't even need to look at the low time frame. You can see how it reacts a bit. Then we push down. And then what do we have next? Do we have clear inducement? do we have clear inducement here? This would have been the POI. So you can see how we tapped it and we pushed off. So did we have clear inducement? Not really, we didn't have inducement. But like I said, inducement isn't something you need to see in every single POI, because it may not happen for your zone, but it would happen for your entry point. Now, is the POI in premium versus discounted? We can draw this and we can see, yep, it is in premium zone. So cool, this would be a valid trade. Now again, did we grab liquidity? We indeed did, because we broke the previous high of this zone, and this would be a liquidity grab because you see an immediate swoop after that. Now if we look on the 1 minute, you might see it clearer over here. Yeah, there we go. So cool, this is another zone we have marked up, right? Now again, with inducement, it's a bit of a hit or miss, because you might see it, you might not see it, so that's something to just be mindful of. Now this is a very unclear example here, right? So if we look at the 30-minute time frame, so you can see how we did break structure here, right? So we have our boss, okay, and if we need to replay it a bit here. We have our boss, we have this swoop of liquidity here, so this did sweep liquidity. This is an extreme with no imbalance present. So this region, right, you can see how it does have some imbalance here, so we would start by marking this one up first. Then we look at the 30-minute time frame. What do we see? Is there something else we can mark? You can see this last sell range here, and you have this. So for me, I'd go, okay, we could mark this one, right? But we have this wick here, so what is in that wick? Let's look at the 5-minute. Do you have a last? That's basically push, like selling strength going in. So you have that huge push down, so a lot of selling and then buying. So what I would usually do is if I have a wick like that in my charts, I'd usually include the wick because there is selling going within that. So like this, if you just included one candle like this, just that without the wick, you would miss out on a lot of buying here and then selling in terms of a supply zone. So you have this zone, right? Now what else do we have to look at? Do we have a boss? Yes. Did we react to a supply or demand zone? We indeed did, right? If we look at the 15-minute time frame, nothing very clear here, so let's look on the 5 minutes. And why do I say we did? Because we did break structure here, so in a sense there is a POI here, right? We can see one here. If we draw it out, you can see reaction, push, reaction, push. So we did react to a supply or demand zone, but we broke through that supply. So we have a supply zone failing there, right? Then we have this zone. We've included the wick plus the last candle there. That makes sense with clear imbalance present. Now, is this within premium versus discounted? You can see that this would be within the discounted range. So if we forward price, you can see an immediate reaction and a push up, right? Now, I could have gone and went, okay, let's mark this up alone and look, sniper entry, but that's not what I do. I usually include the wicks because I want to be more wary that price may indeed push all the way down again. So that's really how I trade. One of the things to note is that liquidity grabs, right? Did the zone grab liquidity? How do you spot grabbing liquidity? Usually what you see is, this is a perfect example. You see a range of candles like this, you see a lot of wicks, or you just see this. You get a sweep and an immediate push. So you want to see like a candle here, like a range of candles, a push, and then an immediate impulse. So you have grabbed some liquidity here, which is what fueled the impulsive move up, if that makes sense. So that's something you want to just keep looking at your charts and understanding what it is. It could be clear on the 30 minutes, it could be on the 5 minute, 1 minute. You probably see an impulsive move either way. Now this one here, this is a liquidity grab. You see an immediate grab and an immediate impulse. So that's literally a liquidity grab. You have to train your eyes to see this a bit more. But you'll most likely get it quickly. As soon as you see an impulsive move, you'll spot it quite immediately. Now with this, where is the liquidity grab for this? You can see clearly it is this point. Alright, so you have the liquidity grab, you have a push and an impulsive move. So yeah, that will be really all I have for this video. Now in terms of spotting the trades, I have to be very clear that you want to make sure that the trades you're marking is pro trend at that point of time. So in this point, you can see how we are indeed. This is an example, right? This isn't something I would mark personally speaking, because you have a demand zone here that did sort of fail, but it didn't really fall through. You have an impulsive move down, a range, bearish order flow. So in a sense, in this case, you would be looking for more shorts, but this didn't follow through. Right? The only reason why I looked at this is because this supply zone failed. You have a boss and then you have a mitigation. So that'll be all for this video, guys. One of the things to note, again, has to be pro trend. You want to make sure it's pro trend. If it's not, then do you have a supply or demand zone failing, and is there enough cause for you to look at a zone in the market which is sort of counter trend to take a trade? If there's yes, then go ahead. If it's not, then don't take that trade. Don't take counter trend, because counter trend trades aren't usually the best, because you're not trading with the market, you're trading sort of against it. These are all the rules that would be applied in terms of how I look at these trades, and they have to work quite often, especially with liquidity grabs, because candles that don't grab liquidity haven't really worked out well, because there isn't enough fuel for the market to push up, and that means that it sort of isn't a I wouldn't say manipulated move, but sort of a move that isn't fueled by liquidity or fueled by the big institutes to push up. So there isn't really a mitigation point there. But yeah, that'll be all. So I hope this video sort of made sense, sort of cleared things out, and if you have any questions, feel free to reach out to me. Take care, everybody.